Now, the paragraph 3 will properly disclose all the statements that the auditor needs to make with regards to different matters. The first one is clause 1, property, plant and equipment. In property, plant and equipment, the following things which are given here, they need to be a statement on all of these things. Now, this can be understood with regards to what, in order to learn this properly, we can do it in a way to understand and keep in our mind what exactly should a person tell about a property, plant and equipment. So now when we also do property, when we do property, plant and equipment, we come across the evaluation of property, plant and equipment, if it has been revalued or not, whose name is the property held in, that is the title deed or not. Then the physical verification, which is also an important audit procedure, which an auditor conducts, which we have studied in chapter 5, right? So all of these things come to our mind, and this is exactly what the auditor needs to give a statement on. So if we consider the first point states that the first point states about the proper records of the property, plant and equipment as well as intangible assets. So it has to state whether the company is maintaining proper records with regards to which are showing full particulars for the property, plant and equipment, and whether the company is maintaining proper records showing full particulars of intangible assets. That is, we have to maintain proper records for both property, plant and equipment and the intangible assets. So we have to maintain proper records and they have to show full particulars. Now, this is the first part. This is the first point, the first statement that the auditor enables. So this part is about the physical. This part is about physical verification. Yes. So this part is about the physical verification. A statement has to be made on this particular thing. This is also a very important audit procedure. So now for the property, plant and equipment, he has to see if the property, plant and equipment has been physically verified by the management. The physical verification is being talked about by the management. If they are physically verified by the management, and it should be done at reasonable intervals. So this is also quite an important point, that the physical verification and this should be done at reasonable intervals. So he has to make a statement on that. And now the next part is about any material discrepancies. If there are any changes, any differences which exist in the physical verification and the records which are being maintained, if there are any material discrepancies, and how they have been dealt with in the books of accounts. So if there are any material discrepancies, if they have been dealt properly in the books of accounts or not. So this part is about physical verification. The first one was about maintaining the records, and the next one is about the physical verification. In physical verification, we see if that is being done at reasonable intervals or not, and then if there are any material discrepancies which exist, and if they have been properly dealt in the books of accounts or not. The next part is about the title deeds, that is, in whose name the company's property, plant and equipment is being held. So here we are particularly talking about the immovable property. So here we have to suggest if the title deeds are of the immovable properties which are disclosed in the financial statements are held in the name of the company or not. So we are talking about the title deeds of the immovable property. If the immovable property which is disclosed in the financial statements, in whose name the title deeds are held, if it is in the name of the company or not. Here one other point which needs to be covered is that if it is not in the name, the title deeds are not in the name of the company, then the company has to provide additional information. It has to provide this particular information with regards to the immovable property. The first one is the description of the property. The second part is the gross carrying value, whatever value it is being carried at. Then in whose name it is actually held. If the person in whose name this is being held, if that person is the director or the promoter or the relative of the above director or promoter, the period for which it is held, and the reason why it is not held in the name of the company. So the company has the auditor has to state all of these things if the immovable property which is disclosed in the financial statements is not in the name of the company. Now the next part is with regards to revaluation. Revaluation means that revaluation is done as per the AS 10, and mostly all of those things are covered here. So he has to tell if the revaluation, if the company has revalued its PP or intangible assets or both during the year, and if the revaluation has been done by the valuation of a registered valuer. So he has to tell if the revaluation is done or not, and if it is done, then if it is done as per a registered valuer or not. The next part is whether any proceedings have been initiated against the company with regards to Benami property or not. So this part covers the details about the Benami property. So we have to tell if there are any proceedings against the company, if the company is holding any Benami property and there have been any proceedings against the company or not, and the proper disclosure of this as well. So if it has been properly disclosed or not, it also needs to be covered. So if we see here, we have to tell, it's like summarized over here, that we have to first of all tell whatever the maintenance of the proper records of the PP and intangible assets, showing the full disclosures or showing the full particulars. Now if the company is maintaining any proper records showing full particulars for both PPE and intangible assets, if they have been physically verified at reasonable intervals, and if there are any material discrepancies, how they are dealt in the books of accounts. Then if the property, plant and equipment or the intangible assets have been revalued during the year, and if yes, if they were as per a registered valuer or not. And there also is another point which is mentioned in the material and not mentioned here, is that if it is more than 10% of the net carrying value or not. So whatever is the net carrying value of the property, plant and equipment, and if the revaluation is more than 10%, that also needs to be stated. The next point is about the title deeds of immovable property. Now the immovable property which is disclosed in the financial statements is in the name of the company or not, and if it is not, then we have to provide the information about the description, the gross carrying value, held in the name of which person, if that particular person is the director or the promoter or the relative of director or promoter, the period for which it is held, and the reason for not disclosing it or not holding it in the name of the company. Next is the last one, is that if there are any pending or initiated proceedings with regards to Benami properties against the company, and if it has been properly disclosed in the financial statements or not.